Well, the market has had a nice run up since February 10, and all the usual suspects, such as the banks and major miners, etc., have been snapped up. But are there some companies that still look like good value? Simon Conn, he's a senior portfolio manager at Investors Mutual, is always on the lookout for good value companies. So what is he seeing right now? Good to see you, mate.
Thanks, Peter. Thanks for being on the show.
Was there any sense of relief when that February 10 bounce came along?
Yeah, look, it's good to see markets sort of recovering from that that oversold position. It's been a very volatile start to the calendar year, though. So it's...
Did you think that the sell-off in January and early Feb was excessive, given what you could see in fundamentals and all that sort of stuff?
Yeah, look, it's just, I think we've learned to be attuned to a very volatile environment, and it's just a continuation of what we saw. I think, even as we're going on holidays towards the end of December, we saw, a lot of the stocks got pushed to extreme valuations and then fell quite rapidly. And obviously with the oil price falling, a lot of stocks fell. Yeah, it's just proving to be a very volatile environment. So,
do you like what you've been seeing economically here? Because, 2.5% or lower was the kind of economic growth number most economists were banding around, and we got a 3% number. The job creation numbers have been good. Sure, you can bag the ABS, do we trust them? But the bottom line is the economy is looking a lot better than what this time last year there were economists tipping recession, and the Sydney Morning Herald was actually leading with it. So what do you think?
Yeah, so look, I think the thing that's changed in my mind, or not changed but been reinforced, is since since early February we've had had reporting season, and that's really confirmed that this transition we've had in Australia now for a couple of years is progressing quite nicely, from the mining-facing sector of the economy to the more broad-based, broader east coast economy, really. To some of the more sectors like manufacturing, some of the infrastructure stocks doing okay, packaging companies, healthcare. And there's a broader spread of sectors in Australia than just mining. I know it got a lot of headlines, and our terms of trade got a significant boost, but there's much more depth to the Australian economy than just that one sector of the economy.
Which is a good sign, isn't it?
Absolutely.
Now, but I know how hard it is to get Anton confident and positive, but did he respond a little bit more positive to the data that's coming out?
Yeah, look, I think he was, mildly happy. I think we're all happy with reporting season, the way the companies are positioning their businesses. In terms of the way they've taken costs out, they're prudently managing their balance sheets. And I think particularly the most pleasing thing with reporting season was seeing companies being confident enough to increase their dividends. Yeah. So Sky City was a company that increased their dividends. They've been growing quite nicely with their high roller, and tourism to New Zealand's been quite strong. Yeah. They've upgraded their main gaming floor in Auckland. They had a good result and increased their dividend. GWA, which is a company I've come on the show and talked to you before, they increased, they returned to paying dividends after having a hiatus last year, and had a reasonable result, and looks like a better year this year. So there's confidence in corporate Australia. Pact is another company, really solid. Ridges Plastic Manufacturing, and it increased their dividend. Made an acquisition towards the end of last year, which can enhance their earnings going forward. So, I think that we've got a really fortunate in Australia in the market. If you look beyond the top 20, top 50 stocks, there's a splattering of good quality companies, and it's just about buying them at the right price and backing the management to grow those businesses through time.
On that particular subject then, if you look at the way the economy seems to be heading, do you think there are some companies out there that have been ignored compared to, when the banks get beaten up, we wait for a price, we all go and buy banks. But there are other companies below the top
there's always stocks
that have been good, solid dividend payers over history.
There's some good, solid companies that get sold off in any, thrown out with any sort of fear-mongering, and a great example of that is a company called Tox Free Solutions. I think I've talked to you about Tox before, a leader in industrial waste services across Australia. Just today they've announced the acquisition of a business called Worth Recycling based here in New South Wales. So Tox, they operate some Environmental Protection Agency licensed sites, so that creates a real barrier to entry for their business. Waste streams continue to grow through time, and more.
Do they have many competitors in that space?
Well, really their main competitor is Cleanaway, or now Cleanaway was previously called Trans-Pacific Industries, and there are a small range of small competitors. And obviously one of the competitors that they faced in the past was Worth Recycling. Today they've announced the Worth business that's been acquired, and that increases their exposure into New South Wales, but also gives them access to technology, which they can then take to other states.
Are they a dividend-paying company?
They certainly are. Yep.
You wouldn't be talking about them if they weren't.
No, they pay, not a huge yield. They have been through a big investment phase, but I think then the dividend stream will grow going forward.
What about your view, because since I've seen you, and we have talked about Woolworths before, things have changed. They've got a CEO now. Gordon Conn seems to be, making a few changes. They decided to unload Masters. Has it changed your attitude to Woolworths in any way?
Look, I think it's going to... Woolworths is a really solid business, Peter, strong market position, and it's got a leadership over Wesfarmers. I mean, it still turns over, 45 billion compared to Coles at sort of high 30 billion. So, and it's supply chain logistics, it's got a scale advantage. But look, it's obviously a business that's lost its way, and I think Brad seems like a very capable manager.
Brad Banducci,
yeah, look, he's a really, sensible sort of operator. Yeah. So look, they've got some challenges. It's not going to be an overnight turnaround, but I think over the longer term, the business can do good things. It's still a very strong market position, and the real estate business that they have, effectively, it's a convenience factor. They've got over 900 supermarkets, and as they roll through a refurbishment program and reposition those stores and improve their offer, I think that'll track higher.
So you're basically saying it looks like a decent medium-term play.
Absolutely. Look, the feedback too, we're talking to a lot of the retailers who compete with them and all of the landlords, is they've just lost attention to a little of the details. You hear retailers talk about retail being a detail. Absolutely, got to focus on details. So things like the shopping trolleys being all stacked up and ready to go in the peak hour, and having the shelves stacked and having the right product on the shelves. I think they've lost a little of that DNA, and it's not rocket science to get it back.
But what about the challenges from Aldi and that sort of thing? Does it make the whole industry tougher to make a buck?
Absolutely, Peter. Look, it's much more competitive than it has been. So Aldi have really taken that position at the lower end price point, and they've executed it extremely well. So, look, it is more challenging. I think, retail's a vibrant space. And, obviously the independents are, now facing the threat of, or the entrance of Aldi into South Australia, and then will follow into Western Australia, and that'll create challenges for Metcash. So it's a very competitive sector. But I think, Woolies has a strong market position.
Yeah, you brought up Sky City in Auckland. And I know I was listening to Charlie Aiken do a speech last week where he said one of his investment themes is that the rise of the Chinese tourist is going to be good for lots of hospitality businesses. And he said, well, Qantas will be a beneficiary. Is there any local hospitality, tourism type business that you think is well placed at the moment?
Yeah, look, I mean, there are ways to play that, and one of the ways we've benefited from that in the portfolios is Events Holding, which a business was previously called Amalgamated Holdings. Yeah. They've just recently...
John Murray Perennial likes it as well.
Yeah, look,
it's been a good dividend grower.
Yeah, it's a fantastic business. Two businesses, Event Cinemas, which are great cash cow businesses, and you talk about the ageing population demographic and people looking for a cheap night out. Movies continue to do well. And they also own the Ridges Hotel chain, which is a leading 4-star chain in Australia. They've got a QT brand, which is positioned at the premium end, really trying to appeal to some of those higher-end Chinese consumers. And, they actually own some of their sites. And debt-free balance sheet pays a good yield, sort of 4% ranked. It's not as cheap as it was sort of 2 or 3 years ago, but still, I think not a badly positioned business in this.
Considering that, I think the last figure we got, there was like 1.3 million Chinese and Hong Kong tourists came to Australia last year, which is a record high, and it's probably going to keep on going too. Yeah, look, it's one of those. Tourism is a growing sector of the economy. And I think that's one of the things highlighted by reporting season was that the lower currency had really allowed a lot of other sectors to benefit and who were being suppressed by high currency. Well, one last
and
thing.
Tourism is one sector that can
one last thing. Are you worrying about the dollar going too high?
Look, that's a risk. Yeah, I think that's a real risk. I mean, I think the Reserve Bank's very aware of that issue, and we saw them talking the dollar down and trying to position it. It's very difficult when every central bank in the world wants their dollar to go down, though, Peter. It's a challenge.
That's right. Everyone's trying to take the currency down as a consequence. One of the strongest economies in the world, growth-wise, we're there. Interest rates were there, and even the quality of our banks were there. But the rest of the world, they're just taking their currency down for a competitive advantage, aren't they?
That's right.
Yep. Well, mate, any other observations you'd like to throw at me before I say goodbye?
No, look, I think, we just continue to chip away doing what we're doing always, focusing on good quality industrial businesses that have got strong franchises. And, through any market turmoil, you find opportunities to buy some of those good quality businesses at the right price, and it's just being prudent and sticking to our knitting.
Great stuff. Good to see you, Simon.
Thanks, Peter.
Simon Conn from Investors Mutual Limited. After the break, we'll be hearing about the Committee for Melbourne with Kate Roffey to find out what the nation's entertainment capital has planned for the year ahead.